Good morning. Well, I say good morning, but good morning, afternoon, evening, wherever you happen to be joining us from. I'm Jen. Thank you so much for joining us on Blockchain Banter, Trading Crypto. I'm here with Keith Allen, TA and algo trader, order book analyst, and co-founder of Material Indicators, along with Dr. Mark Richardson, project lead at Bancor and Carbon DeFi. Thank you guys for joining me. Happy Tuesday. This
Thanks for
last
having
week
us.
was, of course, this last week was kind of a wild week, right? We saw a lot of market movements, I'll
Yes.
say, and I've seen a lot of mixed. I'm not just reactions. I think it's a lot of this is what caused this. A lot of underlying reasoning for why the market was moving the way that it was. And so I guess I kind of want to just start with, was there anything over this last week that really stood out to you guys? Was the market moving the way that it did, specifically Bitcoin, right? Was this due to anything, or was it at all odd to you to see the sort of movements that we were seeing?
Mark, you want to take that first?
Yeah, certainly. So I think it's worth remembering that a lot of markets move together, and Bitcoin tends to trade like a tech stock. Um, One of the things that's happening in the tech stock sector is, well, there's two really big ones. One is that there's this idea that the AI bubble is bursting. It has become a very focused point of conversation. And the reason is that, despite the billions and billions of dollars that companies like OpenAI have been pouring into their AI models, a Chinese hedge fund managed to outperform it on many benchmarks for as little as $6 million, and then open source that model. And so this is huge for a couple of different reasons. One is that because it's a Chinese company that's doing this, they don't have access to the hardware that NVIDIA has produced specifically to support AI, technology. And so without those chipsets, either the model is not that difficult to, is capable of being established without that kind of, technological superiority that NVIDIA represents, or the Chinese have access to their own silicon that's capable of the same thing. We actually know in this particular case, it's the former, not the latter, rather than using a specific form of trained model, which is the way that OpenAI has developed products like ChatGPT. It's using what's called a reinforcement model that's a lot lighter on consumption of, premium technology like what NVIDIA is selling, and remarkably has produced something that's equal to, if not better than, the products that OpenAI has been peddling. So there's two big parts of the tech economy that are impacted by this anecdote. One is obviously the American AI companies themselves, and then the second one is the hardware manufacturer NVIDIA that has been, skyrocketing towards super high valuations off of the, let's say, the presumption that the technology that they are providing is going to be necessary to maintain dominance in AI. So a big shakeup there that affects, again, two really big industry players. And then at around about the same time, the Wall Street banks have margin called Elon Musk on his Twitter loans. And it looks like a lot of those banks are now preparing to liquidate billions of dollars in Tesla stock. At around about the same time that Elon Musk is sending, or emails to the people within Twitter, notifying them that the company has failed to break even, or is barely breaking even, I think is the
Right.
verbiage that he was using. And that's, that's pretty scary. When these banks do turn around and try to offload this Tesla stock, obviously it's a very public thing. I imagine a lot of these deals are going to be closed OTC, but it would be a mistake to think that it's not having an effect on the market. So it's really like a big sort of combination punch that has made let's say it's cost the market a lot of its confidence. And so it's not surprising to me that people might be feeling a little bit scared, and that's at least a, a likely source of the kind of instability that we've seen in the markets over the last few days. And even though that's all very much affecting like tech stocks, and specifically US tech stocks, it is going to have sort of follow-on effects onto the Bitcoin markets. On top of that, by the way, like just tangentially, there are also some very, very large like video game publishers that have had like a really bad few weeks. Things like Electronic Arts, I think their stock is down like 17%. Like it's a really tumultuous period. Some of it is justified, and I know something about what is affecting those markets. And then some of these other markets I'm just discovering, and I'm like, I wonder what happened there. So it seems to be that there's just a lot of disappointment and panic in some of these really overheated stock prices. So that is following on to Bitcoin. What's worth
And Mark, I would say there's the underlying element kind of impacting everything, I think, is the fact that we have some uncertainty about the impact of this new administration that is transitioning into office and starting to
right.
make good on some of their claims, and also posturing a bit on this whole tariffs thing, right? So I think that also puts a layer of uncertainty in the market, which is why maybe people are on a quick to react to little things. I want Mark to continue, but Jen, I do have an NVIDIA chart up if you want to share it, just to show the huge gap down they had yesterday on that DeepSeek news, and I would this makes sense, right? NVIDIA stock dumping on that DeepSeek news makes sense to me. I think James Lavish, who, if you don't follow, he's a pretty good follow on X, stated it perfectly. If you sold your Bitcoin on the DeepSeek news, then you have no idea what you're holding, because there is literally no correlation whatsoever, with the exception of what Mark alluded to, when tech stocks especially react, the crypto market tends to shadow that.
It's kind of wild how one market can control so much of, well, I shouldn't say one market, right? I mean, AI is a huge area right now. It's a huge industry, and it's grown.
It's the hot ticket right now.
It is. It is. I mean, we see it happening in DeFi. Mark, I don't know if you've seen this, but it's not just, like stocks and things of that sort. Like DeFi AI is like this newest narrative. And like this is growing, I think, across the board. It's just kind of wild to see how DeepSeek can come in and disrupt that to such a degree, right? So what have we seen from NVIDIA since then, Keith? You have the chart up.
Well, they opened, open low this morning. It looks like there was a dip this morning, but now recovering and facing resistance at the 200-day moving average. I haven't looked at this at all, but I do know this. If you look at, and I'll take off trend precognition and make it a little easier to see. Look at the history. When's the last time it was below the 200-day moving average. January 2023. So, the great Oracle of Omaha has a statement: be greedy when people are fearful. There's still more to be shaken out of this whole situation with DeepSeek and how NVIDIA is going to respond to that. But this kind of looks like an opportunity to me. Just as yesterday's Bitcoin dip was an opportunity to me.
Speaking of, so Warren Buffett, so the Oracle of Omaha is Warren Buffett, by the way, just for people who aren't familiar with the term. And the fund that Buffett runs is Berkshire Hathaway, which has just last week disclosed an $893 million stake in a cryptocurrency bank, which is very, very counterculture for Warren, because he's like very famously been on the record saying that Bitcoin is rat poison.
Well, that was his partner. I think Charlie Munger said rat poison, but he's been in that same camp, right? He hasn't had direct exposure and hasn't been willing to have direct exposure to Bitcoin, but they are exposed, like you said, to banks, and I think potentially even some mining operations. Maybe don't quote me on that, but he does have some indirect exposure.
Right. I don't think he personally has ever said anything, or not that I've come across anyway, like terrible about cryptocurrency. I think it was more that he sticks with what he knows. What he's been able to become successul with.
And at 90-something years old, can you blame him?
Not at all.
Right.
We talk about preserving your wealth all the time.
But he does have, he does have new blood in his organization. And I would think that they're advising him, hey, we need some exposure here. And maybe he said, well, for Charlie's sake, we're not going to take a direct stake right now, and because what would that look like to his longtime partner and friend if he suddenly started adding Bitcoin to their balance sheet?
Right. Mark, were you going to? Oh, go ahead.
I was just going to say maybe not the best investment move, but he's got a reputation, and Charlie has a reputation that not that I necessarily agree with some of the things or most of the things that Charlie Munger said, but there's more to it than just the surface of should he be buying Bitcoin at this point.
That actually brings up something else, since we're talking about investments, right? I mentioned to you guys before we had actually jumped on that Naval on X, and I follow him, and I'm one of 2 million that does, right? But he had posted something that says, investing is how you make money, trading is how you lose it. Now, obviously, this is a trading call. We're talking about investing. We say all the time that there's a difference between, investing and trading. What's your thought on that particular statement? And what advice would you give to traders to not be in that camp of?
Well, my first reaction is he's right. Most people, the vast majority of people, do lose money trading. Okay, it's not an easy game.
Would you consider investing an easy game in general? Would you consider investing? We're talking about buying stocks and things like that, or investing in real estate. You know what I mean? Is that?
I think in most cases, for longer term growth, sustainable. I think that longer term investing, in most cases, outperforms most people's trading ability. There are. It takes years. Most people start trading because, especially in the crypto space, they hear about, the crypto bros making ridiculous gains on meme coins, and they're like, I'm in.
Few and far between post their L's.
Say that again.
I said few and far between post their losses.
Oh, exactly. Right. So where's the transparency there? But it's attractive because you think you go into it thinking, oh, I can make money like this, and most of us, um, I think most of us who trade and who still trade started as wide eyed. I can do this, and you start, and as soon as you start, you win a couple of trades, and you go, it's easy. And there are times where it is easy to make money, right? It's a clear, look at the, look at times like after election day. This was easy money, right? But it's not always like that. And then we have these periods where we have chop, where we have shakedown, where we have downtrends, and people get shaken out. And so it takes years and years to become a disciplined trader who understands how the market moves, who most importantly understands risk management, and can make money consistently as a trader. And being a full-time trader is not does not mean that you win every trade. It means that you win more than you lose, and that you don't risk enough to wipe yourself out at any
Right.
on any given trade. So because you understand risk management.
I think
So
this is where the right tools come in too. Right? We talk about the importance of actually having the right tools. And I mean, I say that in terms of material indicators, right? Like these indicators, your fire charts. I say that in terms of the back testing simulator that you created, Mark. Things of this sort, these sorts of tools. But then I also think it's like you mentioned earlier, the discipline, right? And having the
So the tools
being
and the tools, the indicators, the charts, the back testing, these are all tools that help us make decisions. They help us, they help give us some insight to how we want to, execute, or how the market is developing, how the candles are developing, as they say. But you must have risk management as the foundation for everything, because it doesn't matter how good the tools are. If you're making bad risk management decisions, then you're not going to have longevity in this market, in this game. So it takes discipline, it takes time, it takes an understanding that no single tool, regardless of how much you've back tested it, regardless of what your hit rate
success
is,
rate might be, yeah.
right? I was going to say, our MTF mean reversion indicator is a great example. Tremendous hit rate. Okay. But guess what? Hit rate doesn't mean shit if you can't manage your risk. Doesn't mean a thing if you get stopped out of every trade. And getting stopped out, there's different reasons for getting stopped out. You can get stopped out because your stops are too tight. You think you're being safe and conservative because you're running tight stops, and you could get annihilated because you're losing everything because you're not giving your trade enough room to breathe. By the same token, you could have something that has a good hit rate, but maybe you're hitting a downtrend that is not working to your favor, and you're not sure when to cut when's a good time to cut your losses. Or you're too proud to take the loss, or you're too scared to take the loss, or you're overdosed on hopium, and you're hoping that it's going to recover.
Eventually, one day, it'll recover.
Hope is not a strategy.
Mm-hmm. Yeah. Mark, do you have any thoughts on the investment versus the strategy, or any advice for any of the...
Yeah. I think that first of all, it makes sense to acknowledge the bias that the market has had over the last 150 years or so. And so for investing, what people are generally talking about is buying and holding something over very long periods of time, either to retire on, or maybe they're leaving it to their kids or something like that. Because the market has basically just been trending up for 100 years, it requires very little skill to make money on it. If you just threw a handful of darts at the stock market, in the 1950s, or just bought, the whatever the most popular options were from the S&P 500 or whatever, you would have done just fine. Or even just buying real estate, you would have done just fine. So the time sensitivity component completely goes away when you're trading on such long time scales. And just the fact that the markets over the last century have pretty much all moved up so significantly means that, as long as you invested in something, you are going to be okay. That might not always be true. There hasn't really been a really big devastating global depression in many of our lifetimes. The last one was really sort of the 1930s, and there were very, very few people that were that were making investing decisions back then that are still alive today. So it's definitely been lost from our collective investment culture. But there might be a depression coming, in which case the superpowers of just being able to trust that the market in several years will be higher than it is today may no longer be a good assumption, and you may need just as much skill to invest as you do to trade. But we'll see.
Well, I think, in crypto especially, right? There's thousands of coins, right? Tens of thousands of coins available for traders who want to dabble in that. And I think that CZ nailed it here this week. And this is something that I've been saying for a long time, but it just has not existed at scale, anyways, in the crypto space for a while, but it is starting to develop, and that's good to see. And that is, stick with fundamentals. Time will be on your side. Hot market's going to have a lot of opportunities for quick returns, but if you stick with the fundamentals in the long run, you're going to be with better investments. And again, this is that we're talking investing versus trading. If you are of the mindset,
We're gambling.
if you believe that the long-term macro outlook for Bitcoin is that it will be at some point, at the very least, higher than $110,000 per Bitcoin, and at the most, somewhere between higher than 110,000 per Bitcoin, and Michael Saylor's long-term strategy of an 8-figure Bitcoin, which is not out of the realm of possibilities, but it's, I don't know, for me, it's hard for me to fathom at this stage. But if you believe that price is going to be somewhere in that sphere, and that's a big range, right? There is a universe of price discovery above us. But if you believe that the long-term outlook is bullish, if you believe the narrative about fiat and that Bitcoin is a potentially, or crypto in general is potentially a better solution for the economy, for individuals to have control over their own money, to eliminate intermediaries, DeFi, et cetera. The narrative, can go. We could add layers to the crypto narrative, but specifically to Bitcoin. If you think that Bitcoin over the next 10 years is going to be worth more than it is now, then what else do you need to know?
Yeah.
Right now, can you say the same thing for Shiba Inu? No, you can't.
Yeah,
you could trade it. You could make money on it. And you could make a lot of money on it. But you also know if you've watched an asset like that for any length of time, that it has the possibility to round trip and you could give back everything that you bought. So, with coins like that, yes, there are opportunities that present themselves from time to time. And I do take advantage of those opportunities from time to time. And sometimes they pay off and sometimes they don't. The one thing I will tell you about those opportunities is I am happy to take money off the table. I'm happy for the gains. I'm okay if I leave money on the table, but I don't hold them for long term.
You have to be okay leaving money on the table if you're trading in crypto, I think,
Yeah,
because you're not going to be able to catch the top on every single trade every single time, so you're going to look back and just shoot yourself in the foot every time.
When I first started trading, I was watching screens every waking moment. I was now granted, I'm also running two businesses and raising a family as I'm a work from home dad, all of those things. That's the balancing act. And I literally, could not take my eyes off the screen. And I was, working with a very small portfolio size, and every loss hurt. And and I was scared to lose money, so I was quick to close trades that were in a loss or approaching a loss, or take little tiny gains just to avoid the loss. And over time, I learned that trades need time to develop. They need some breathing room. Had to build in a little bit more stop loss, a little bit more stop loss space, et cetera, to be able to thrive. And I'm still not saying that I get every trade right. Tools or no tools, but I win a lot more than I lose. I do leave money on the table, but I chalk that up as risk management, and I never get upset for profits. If green P&L makes you mad, you're doing something wrong.
Right. Now, okay. So, Mark, and if you want to add anything, please just unmute and, join in. Since we are talking about just all of this in general, and I noticed, by the way, the comment underneath CZ's post, somebody asked him what he thinks of TA. I don't know if you caught that, Keith, but
Yeah,
it
I
caught my
did.
attention because we're talking about it sounds
Yeah.
like investments are more the fundamentals. It's time, right? It's
Did you see
risk
his
management.
response?
Yeah, it's
I
one of
don't know
the
how to
things
do
I
it. It's one
know
of
I
the many
don't know
things I
about.
at least know I don't do. I
Yeah.
don't know.
Mm-hmm.
And
That's
that's
important
okay
too.
too.
Yeah. Okay, so can we bring up the Bitcoin chart?
Yes.
Because while we're talking about this, right? Yesterday there were a couple of spaces that had caught my attention. One was about DeepSeek and NVIDIA, right? And what was going on with the stock market. And the other one was Bitcoin crashing to 73K, question mark, alt season is over, this AI bubble is taking over. Let's take this one thing at a time. 73K. Is that I mean, I know we've spoken about this in the past, but do you guys see this as a sort of key level?
Mark?
What do you know? What do you think about 73 in general?
I'm just pulling up the chart now. Give me 1 second.
Well, you'll notice where I have my lines drawn, and this is
Mhm.
subject, right? Everybody's a little different. So I'm looking at the 76K level for the brief amount of consolidation we had here. In terms of 73, where have a local top here. We have, let me see if there's more confluence around 73. Just in general. And there's a little bit, there's some double toppiness, in this range, slightly above 73, right? Back here in March, we had a local top at 73,800, and we had a local top in October at 73,600. And, so there may be some technical merit to that. Then these others were at what? 72. I was looking at 76 because of this brief amount of consolidation we had after, once we started this Trump pump off of election day here. This is November 5th. This is November 5th. And then we started seeing things go up, and we were looking, if you recall, we were looking for consolidation levels for things to pull back to at some point in time. And so at the moment, we have some confluence between this range, and the 200-day moving average has just pulled above that here in the past day or two. So this is interesting to me, and we've had some discussions in my X channels about this range, and I went into it yesterday in my analysis. So the other thing interesting to me is that if we were to get this, and I'm not saying that this is happening right now, but as Mark and I have both been saying for a very long time, deep corrections happen in these markets, and this would be from the current all-time high, would get us in that 30% range of a correction if that were to happen. And if we look at history, I'm a bit of a history buff when it comes to this kind of stuff. That would be very consistent with what we've seen in the past: 31%, 21%, 41%, 34%, 30%. This isn't every dip, but we've had them as deep as 75. I don't think that we'll see anything like this at this point, unless there's a major black swan. I guess black swan by definition is major, but I think that this is a reasonable target to consider for a potential deep correction somewhere along the way. And so as time continues, the 21, what happened yesterday, you recall that recently we had a death cross between the green 21 day and the red 50-day moving average. We pulled out of that recently, and now, before yesterday's recovery, we were in jeopardy of another potential death cross. And if that does happen, then I would say that these next ranges come back into play, this 91.5 level, and then we had this consolidation here in 91.5. We had it at 86, and then back down to this 76 level are all potential. Fortunately, we got a nice bounce yesterday after this wick, and my early analysis said what we want to see happen is a close above the 21-day moving average to keep these from death crossing again. And at the moment, it looks like we're getting that. So the indications from trend precognition, you have to take things in context. We had a weekly close that suggested we were going to go down, meaning, or I should say, not necessarily that we're going to dump, but that we weren't going to make a new all-time high this week. And this could certainly still get invalidated. And, the kind of pumps that we've seen that have, especially the ones related to Trump, Trump movements and policies, et cetera, have often helped invalidate some new signals. Not often, but sometimes anyways. And now after yesterday's dump, we saw at the close, we saw a new signal suggesting we're not going to go back to this level. That was yesterday's low was what, 97,750. So that's essentially saying we're not going to revisit this here today. And as I said, going into the weekend, I think that consolidating in this level, we were looking for that. It appeared we were getting an RS flip above 100K. That was invalidated after punching through it yesterday. So we really have to reestablish that. But I think the healthiest thing that can happen is that we consolidate above this 100K level. I don't want to see a straight rip out the top. I really don't. I really want to see us establish this foundational support here, because at some point in time, there will always be pullbacks. There will always be corrections. And if you don't have anything, any structure for things to land on, then price can drop right through. So this is giving us some structure. And now if we're ready to move to this next level above 100K, which is historical, then let's go ahead and consolidate here for a while. And then we can go after that 120 target, and then see what happens from there. That's basically my view of what we're seeing right now. So we did anticipate some of these things coming over the past few days, in part because of the signals here, but also, of course, watching the liquidity movements. When we saw this land, we had a pretty good indication that that we were going to see price move up from that. And probably the one thing that tipped me off yesterday, that we were going to bounce here before we actually bounced, was this little tiny order class started. You see this smooth vertical line, or nearly vertical line? That's not normal behavior. Normal behavior has contours like this, right? It goes up, it goes down. It's wrinkly, for lack of better terms.
Right.
This was clear T-whopping, time weighted average price, meaning there's a bot that is just boom, whether it's seconds, whether it's minutes, whatever it is, it's placing the same amount of buy order, market buy order on the clock.
Right.
And so this was an indication that, okay, this is not a retail move. This is a bot TWAP buying. And it wasn't a huge amount. It was only, probably $1.5 million in a short amount of time, but that's a lot for this order class. And so once this started, and then we saw whales do incremental buys, I had more confidence that things were going to move up from there. Now, when we saw this selling occur, they did take out one level of this liquidity, but the rest remained, right? This was like $50 million, just stacked like suddenly. So they did take out a little bit of this liquidity here. And then it was off to the races. And so, at that point, the other order classes started buying, and the rest is history. So
looks like the brown hasn't. What's up with the brown? I mean, that's just
the brown
straight horizontal. That's straight vertical.
The brown actually bought. We're looking at 24 hours. The brown bought, I think, just before this occurred. Let me refresh this. So, yeah, brown bought. Let's see where that was. Brown bought earlier from where things bottomed, right here.
No, those are not wiggly lines, the brown.
Right. Well, brown doesn't buy frequently enough to have wiggly lines, right? That's why it's always, kind of a squared off right angle thing,
right?
Because they don't do enough, versus purple,
smaller,
which trades a lot more. So this is why, even though brown makes larger orders, purple's frequency creates much more volume, and that's why purple has the most influence over Bitcoin price. Other things we saw developing over the past couple of days was, we did have a rug pull up here before this. Some of this liquidity was taken, but in the beginning there was a rug pull, and I posted something like that about that, I think, on Sunday when it happened, opening the door for retest, which we indeed got. And so this was not a surprise for me. I was prepared for it. I had bids placed to pick up a little bit more Bitcoin for my position, which were filled. And here we go, working our way back up. I expect to grind up here. It's a positive sign that we're seeing bids, blocks of bids move back up here above 100K. And that's what you want to see in terms of being bullish here, because there's a lot of liquidity overhead that still needs to be, how should I say, either taken out or moved to clear this. We've got a lot overhead, 130 million right at that 110K level, and you know, over 100 between here and there. So I don't think we're just going to rip through this today. I think that we are likely to grind in this space a little bit, and the fact that we have these blocks, these ladders of bid liquidity coming up from 90K is an indication that we're in a pretty good spot. But we could consolidate here for a little bit, which is really what I'd like to see happen. So I'm happy with what we're seeing.
Yeah. Mark, what about yourself? I know while Keith was going through his analysis, you were pulling up your chart. Are you seeing anything that you'd like to point out or bring attention to?
There are a couple of things that that Keith said that I think I'd like to, let's say, further underscore. If you have a look at the cycle bottom, sort of where this current rally began, which was in January of 2023, and I'm looking at the weekly chart, by the way. So this is, right at the end of the bear market. We saw the price jump pretty quickly from 16K up to like 24.
Yeah, really from the FTX crash is where we bottomed out in November of 22. Right. And then, like you said, January is when we started to leg up.
Yeah, and like the Bitcoin price was rubbing its face against the 200 EMA and SMA for a little while before eventually breaking above it, and that kind of confirming the bull market. It even came back and retested those same moving averages before rallying higher. But I'm paying attention to this consolidation period that we saw beginning in sort of March of 2024, which is one of the features that Keith was also discussing. And on the weekly, you can see that basically the price moved sideways, like a little bit, it was a little bit of a downtrend, nothing too catastrophic, but basically trended sideways until it came to meet the 50 or 51 SMA and EMA close,
which was also a double bottom.
Also a double bottom, yeah, well observed. It wouldn't surprise me if we see the Bitcoin price come back to check these 51 week moving averages. Now the current price,
and that's the 73. Here's your 73 number, Jen.
That's exactly
right here on the weekly.
Exactly at 72, 73.
We have confluence with the 50-day moving average and the trend line.
Exactly. If you have a look at where those prices sit relative to that consolidation period, it's basically the resistance line that we saw during that part of the market cycle. So I do think that there is something magical about those numbers. I'm measuring 72,487-ish, maybe 72,479, and 72,557. Now, I'm not saying that necessarily the Bitcoin price has to come down to meet those levels. I mean, it could, but I think balance of probabilities that we're likely to see something similar to that, February of 2024 to October of 24, right? So basically just slowly moving into it as the average comes up to meet it. But I would like to see it, check those prices a couple of times before rallying higher. And that could take a little while.
The 72 and change that you were just saying? You'd like to see it retest that?
72 and change. But remember, the longer that it takes before getting there, the higher those moving averages move. So, by the time Bitcoin gets to them, they might be already at like 80, 85, something like that. But I do think it'll come back down to check those levels. That seems to be one of the that could be a developing characteristic of this particular bear market. Of this particular bull market.
So I would say, based on looking at this in the weekly chart versus what we saw on the daily, this would give, from a technical analysis perspective, this puts more strength on the 73K argument than the 76K, right? Because it was just such a light bit of consolidation there at 76. But we did have that 200-day pulling up above it at this point. So yes, I think this is a very valid target indeed, and that would be a 33% move from here. But like Mark said, this doesn't have to happen from here. This could happen from 120, 150. There's no telling when it comes. Just know that it's likely going to come. And I
You
think
said it was
that
a 38% drawback?
this is 33.
33. So it's
And
not necessarily the 72, 73. It's more the 33%.
no, well,
that we're
that just
looking at
happens to be where it aligns with the technicals right now, right?
currently.
I mean,
Mhm.
we've seen 50% moves, so no number is off the table, to be honest with you.
Right.
Ultimately, I think I agree with Mark that retests of this support line are valuable. I had originally drawn a trend line from where things began back after the FTX crash, right? We were on this trajectory, but once we started getting into this, these breakouts here, and we had these Trump pumps along the way, that trajectory changed a little bit, right? So I drew another trend line from October of 2023 that's on pace, really perfectly aligned with the 50-day moving average. Excuse me, 50-week moving average right now. And so I think that as long as this is respected, and look, we get overshoots on technicals quite a bit in crypto these days. But I would say the real level that I would be most concerned with holding is this 2021 top. Look, we remember how long we consolidated below that 69K level. As long as that is respected, I think we're in a healthy bull market. No matter if we drop all the way down to here, I think that's a healthy bull market.
Right.
If we break through this, that's a different story.
That's when you're actually like a seasoned trader, is when you can see something draw back 70 or 33%, something like that. And you're like, this is healthy. I'm okay with
Well,
this. This is healthy.
remember what, we started off this call referring to what Warren Buffett was saying, right? About, getting greedy when people are getting fearful. The opposite is also true. It is very,
Be fearful when people are greedy.
yeah, get fearful. Like you start to get scared when, when people are getting like overly greedy. And the way that looks on a chart is that the price just keeps moving up, and that should, that's when you should start feeling a little nervous. And so when we say that a correction is coming, then that means that it's a healthy bear market. It means that maintaining a long position to the upside is probably fine. But yeah, it's when things get overheated that you don't see those corrections anymore, that it looks like we're headed for something much more catastrophic.
And how do you counter that, or not necessarily counter that, but how do you deal with, because let's face it, nobody wants to watch their portfolio drop 30%.
I just
Right.
saw somebody post about it. They're like, hey, at least I took screenshots. Now I know when I'm taking screenshots next time, I'm going to sell it, because that screenshot is all I'm going to be left with at the end of the day.
Right. So that's what I was going to say. Profit taking does not have to you don't have to sell your whole bag. Okay. But when you hit milestones, when you hit targets, it's okay. Not only is it okay, it's smart to take some profits, and then you can reinvest those profits, right, and compound your portfolio. But if you never realize any gains, then you are in jeopardy, because listen, if and when that dump comes, and let's say it does come to this trend line, there's no guarantee that it holds, right? We think it's going to hold. All of the fundamentals suggest that it should hold, but there's no guarantee that it holds. So what happens if it punches through? At some point in time, the bear will be upon us, right? At some point in time, we will enter a bear market. You don't know if that's happening when you start here. You might see some indications that, hey, we're crossing these moving averages. We're getting some death crosses. It looks like the bear market is developing, but you won't have a confirmation until you've already lost 20% or more, right? So the way to prepare yourself for that is to take some profits along the way, so that now you've grown your stack, you've realized some gains, you've put them potentially into other trades, but you will at the end of the day have grown your portfolio rather than just watch the whole thing evaporate on you. So taking profits along the way is a good idea. Yes, I took a little bit, in this 102 range. I didn't take it at 110. I'm not taking it every little incremental new all-time high because we're in price discovery, but there are people that do that, and that's okay too. So if you don't ever realize any profits, you're in jeopardy of giving back everything that you earned. If you take a little bit along the way, incrementally, then you're always building and growing.
Yeah.
And when we do get those corrections, if the bottom does drop out, you will have grown your portfolio and have had more than you started with either way. And so, the other thing that's key is knowing what your levels are that say, okay, this is it. This is, we've broken through the levels that I'm comfortable with. I'm going to take my losses. Because when you get down here and you're like, okay, maybe this is my last line of defense, maybe it's going to hold here, and it doesn't, it's too late.
It's
So
that create a strategy and stick with it sort of thing.
create a strategy, create that strategy, and pick those targets before the event happens, because when it's happening, you can't help. It's very difficult not to be emotional. It takes
Right.
a lot of discipline not to be emotional. When you watch your portfolio drop, I don't care how seasoned you are as a trader, when you're watching the number go down and down and down and down and not recover, it's hard to look at.
Yeah. Hard to
So
not feel something.
make those decisions before, when you open the trade. When you open the trade, make those decisions. Now there may be times, where something has changed dynamically in the market and you want to and you make some adjustments, but I would say probably the vast majority of the time, not probably, definitely the vast majority of the time, set your levels and don't touch it.
Thanks, Keith. Mark, do you have any? I know it's the top of the hour. Do you have any sort of advice or anything that you want to give our listeners today?
Same as
Having that
always.
strategy before is a great piece
Yes.
of advice. Go ahead.
Yeah, same always. Just be careful. Be extremely critical of whose advice you're listening to, including ours. And yeah, don't trade with more than you can afford to lose.
Yeah.
Yeah, absolutely the basics. You make a great point about whose advice you listen to, and I would say don't listen to us as advisors, because we're not.
Right.
This is we're trying to give you some insight and teach you how to make your own decisions. Somebody commented earlier today, Mike Saylor bought another 10,000 Bitcoin yesterday, and the comment was, I just don't like how he always makes the all-time highs. No, he doesn't. And that data is readily available. There's a chart I've shared, right? That you can see exactly what his purchase dates and amounts were. And you could hold that up against the chart and make that decision for yourself. Yes, there's times where he buys near the high, and it's reasonable to expect a multi-billion-dollar buy to move the market a little bit, if not a lot, but he's not making the all-time highs. Now, yesterday he may have saved us from going lower,
Yeah.
but don't just speculate on what you think. Find the data. I promise you the data exists. And it took me a Google search of less than 1 second to find this chart. So before you make a statement like that, actually look it up.
Yeah. Well, you guys are awesome as always. I appreciate it. Thank you so much. Next Tuesday, Mark, I believe you are traveling, so safe travels to you. And next Tuesday, we will catch everybody again. It's interesting. I'm, looking forward to seeing what happens with the stock market, but also, like we said, has everything with this new administration been priced in. I've been seeing some tweets, some posts on that as well. So maybe we'll be able to discuss that a little bit more.
The most interesting thing I have seen, obviously, there's controversy over whether it will be a Bitcoin reserve that's now a strategic digital asset stockpile, meaning not just Bitcoin.
Right.
That obviously isn't being met with warmth from the community. From the guy that launched his own meme coin the day before he was inaugurated. But something that is really interesting to me is this proposal to eliminate capital gains tax for U.S. Traders on American.
It's not income tax, possibly.
No,
Go ahead. Excuse me.
That's a whole nother level, right? But to eliminate capital gains on U.S. based blockchain projects.
Mm-hmm.
So I don't know about you, but that would totally change what I'm clicking the button on, what I'm clicking the green button on, for sure.
Oh, moving forward, 100%, especially because there was so much uncertainty about any crypto projects, having their feet planted
and
in
then
the United States.
imagine
it's a lot
how much
that will happen there.
Imagine how much capital would rotate into crypto if that is the case.
Yeah. Yep, 100%. We'll keep an eye on that. Thank you, you guys, for joining me. As always, you are wonderful and I appreciate you. Thank you to all of our viewers. Appreciate you also. Always don't hesitate to, add your comments and your questions and things like that. We'll revisit them next week if we didn't get to this week. And be sure to follow the guys on X. I did post a couple of things that they had shared here, so check those out as well. Thank you so much, and we'll see you guys next Tuesday. Everybody enjoy your week.
Thank you. Feel better, Jen. Mark, travel safe.
Thank you. See you guys.
Bye.